Welcome back to the floor of the CME Group here Friday, June 10th. I'm Killer from Treasury Curve. Got cash? I can help. Thanks to everybody for all the great comments. I appreciate it. Had a good time out at CNBC Fast Money. Really got to drill down a little bit on this Treasury yield situation. Let's look where we're at right now in the markets, folks. The market is in the hurt locker. Everything we've talked about, there's a little bit of a breakdown here off of last Wednesday's essentially pre-ISM number. The S&P was trading 1341. We're seeing some lows right now in the 1260s. Looks like more damage to be done. In that S&P, we've talked about this head and shoulder top objective down at 1225. I think there's a stopping point prior to that, folks. The 200-day moving averages. I like looking at the 200-day. We haven't been able to even talk about the 200-day moving average of the S&P due to the fact it's been at that elevated price above the buck there at 1300. Clearly, we're now trading that SEP contract. That's the front contract. But in the 200-day moving average in the SEP, we're looking at 1243.75. It could be a target here to the downside. A lot of volatility. We're seeing some volume resume. Yesterday, we did see that little bit of a relief rally. Obviously, we're seeing this market 6 days down the road. Yesterday, the 7th day, they popped them up a little bit, despite the fact that the jobless claims was still elevated above 400 at 427. So I really think this data, it's pertinent. We're seeing continued weak data. So where do we go from here? I think the market's going to tell us on this Friday, folks. I hate to be the bearer of bad news continually, but technically they wanted to take this S&P down. In the bond market, it continues to signal us. They're making new highs in the 10-year. I tweeted this morning, you can get me at The Killer on my Twitter account. I tweeted these levels, the 30-year, 126.10, that's the objective. In the 10-year, that 22 level, they get above that 22 right there, we're going to see some shorts on the run. It's going to happen fast. So maybe they make a new test down to this 2.75% yield in the 10-year. Hope you're nimble, hope you're quick, hope you're disciplined. Don't get married to anything, because in the event this S&P does take a quick low, a short-term trade could be a back and fill back up to that 1284, that old killer magnet. From the floor of the CME Group, have a great weekend. Hope we have the rest of the day. Great trading. Thanks so much.